Today, the International Monetary Fund released its Global Financial Stability Report, and in it, the IMF warns countries around the world to closely monitor efforts to jumpstart economic growth, saying the policies could inflate asset bubbles and destabilize financial markets. CCTV's Shraysi Tandon is live at the IMF in Washington with details. Shraysi?
That's right, Mike. The IMF is warning that it's time countries really implement significant policy changes so that they can really rise up and face the challenges of the global economy. In fact, earlier today, I had an exclusive interview with Nobel Prize-winning Professor Joseph Stiglitz, who says to me that countries really need to start striking that right balance between action and inaction. He also says to me that the U.S. in particular needs to start unclogging its credit markets.
One always has to balance the risks of doing something, the risk of not doing something. The concern with QE3 in the United States is that the benefits have been there, but relatively small. And one of the reasons is we haven't unclogged the credit channels.
We recently saw Bank of Japan announce that they're going to implement a record fiscal stimulus, which then of course devalues the yen. We have some people in the market that are extremely pleased with this, and we have others, specifically those that compete with Japan in the export market, that are not so happy. Do you think that this is a good policy move on behalf of the Japanese?
Yes, I think Prime Minister Abe's policy does make a great deal of sense. It's actually what I've been calling for in a sense for the United States. It's not a single instrument, it's a package of three policies. Monetary expansion, fiscal expansion, and structural policies, what he calls growth policies. Right, yeah. And any one of them alone would not work.
We recently saw some, disappointing first quarter GDP figures. Right after those figures came out, we saw gold prices plummet to the lowest level in 2 years. Now, of course, everyone's got a theory for these gold prices plummeting. Some people are saying, it's just a market correction. Others are saying this is directly linked to China's economy. What do you think is behind this drop in gold price?
Well, let me just say, first of all, every economy has slight perturbations, up, down. Right. China's economy is still performing very well.
Of course.
If you look at it historically, 20 years ago, if we had seen a growth number like this, we would have been, this is unbelievable.
Right.
It's just that our
8%
expectations
growth targeted for this year. That's any economy would take that, right?
Exactly. It's just that our expectations have gotten so high. I think the government's been very realistic and says we're really, it's more important right now than the quantity of growth alone is the quality of growth.
A lot of people fear the contagion of Cyprus. Do you think that that debt contagion is going to be contained, or are we going to see this rippling on to other economies? Of course, Cyprus is much smaller.
Cyprus is small, but what Cyprus reminds us is that there are deep structural problems in the Eurozone, and they have not been fixed.
Yeah.
It also reminds us that the European policy-making framework leaves something to be desired. Remember at the beginning of the Cyprus crisis, they came up with this really wacky idea that insured depositors should take a big hit.
Yes, I remember that.
And the point is, everybody piled it on and said, you can't do that, it's the wrong thing, and then they reversed themselves. Yeah. But it certainly doesn't give a feeling of confidence in the decision-making process.
They've had a plan to have a plan to have a plan.
And they've been talking about doing something about growth.
Right.
And now, 5 years after the beginning of the crisis, 3 years after the Greek crisis came to the fore, what do we have? No growth, recession.
Mike, as you can see, Joseph Stiglitz was very candid in his interview today. He's quite bullish on China and Japan, not so optimistic on Europe, which is still mired in recession, if not a full-blown banking crisis. In fact, after the interview, Joseph Stiglitz also said to me that he thinks that the fact that some of Cyprus's big banks were on the brink of collapse is still a destabilizing factor in the global economy.
Well, he's certainly animated and interesting, and he doesn't hold back. Thanks so much, Shraysi.